Hello, everyone. Joshua Hayes at BigWaveTrading.com. We continue to have a very strong market, and if we just keep it simple and just look at this tickets indicator, which is a stair-step version of the moving average convergence divergence line on the daily time frame, we've been stair-stepping below the zero line since those lows in March, and we are still stair-stepping higher. And as of this close, there's no negative divergence here, and it is strong as can be. If we then go down to our next time frame lower that I work off of, the hourly time frame, you can see once we crossed the zero line, everything was looking good. We were starting to show some negative divergence where the indicator was pulling back. Price kept on marching higher, and this time around, price never did correct, and it's now making new highs. So remember, as long as this indicator is above the zero line, that's bullish. And this would have been, it came so close. In the last video lesson, I believe I told you guys that this indicator ever gets, if this price ever gets below the 50 SMA on either one of these time frames, so with the tickets indicator like it is right now above the zero line, price gets below zero, this indicator above zero, I'm so sorry guys, I'm just horrible with speaking. Price gets below the 50 SMA, with this above the zero line, actionable back up and through. On the hourly time frame, we came so close to seeing that happen, and you can see what the potential gains are. You can use QQQ calls at the money, in the money, out of the money if you're insane, or you can use the TQQQQ, but that is a way to trade this index. Now, a lot of people are calling for the market to pull back, but I'm going to be honest with you. The IBD put call is low at 0.64, but it's not at 0.5. 0.5 or lower is where I start looking for a tippy top reversal for short-term pullback in the market. The AAII bull bear ratio, I think bulls are at 38%, and that's historically normal. They're not elevated at all. And the bears, I think, are at 33%. Normal is 31%. Nothing is absurd there either. The only problem I see is the NAAIM that ticked up to about 97%. That historically likes to top at 100, but there's still room to go there, even there. The Seen in Fear Greed Index is currently at 67. It's not even close to being at 100. It's at 67. So I just don't see it. And most importantly, if you guys happen to see Jason Shapiro and Matt Caruso's podcast on Monday, Jason Shapiro said he's never seen the market at all-time highs with bulls on the commercial side, commercials, most bullish that they've been in a year. And this would be a real money positioning, and large speculators and small speculators at 1 year bearish lows. So it's the most bearish speculators have been in a year. It's the most bullish commercials have been a year with the market at all-time highs. He's never seen that before, and that was on Monday, and obviously ending the week, you can see how that's playing out. And speaking of how things are playing out, this is our seasonal year. This is our average midterm election year. We should have been selling off by now. Instead, we are participating this year like it's all other years. However, in the middle of May, we do pull back either a regular year or a midterm year. So we should expect that pullback. However, if we break out of this, or if we stay in this midterm election year cycle, we should be chopping around a lot until the end of the year. But so far, we're playing out like it's an all other year. So after this pullback, what normally happens? So keep this in mind. Now, I happen to see a chart that I agree with a little bit better from Fundstrat's Tom Lee, and he's showing an expected move higher into August, and then, which is seasonal, good years or midterm years, when the pullback happens, we get that pullback, and then he's expecting 7,700 by the end of the year, towards the end of the year, whatever. That would be 770 on the SPY. I can see that happening. What's the SPY at now? And might as well look at what the SPY looks like on this indicator here. 738. So we have room to 770. But once again, we're looking really, really good. So let me get rid of that and let's go back to our antiquated charts. to end this. It's just overwhelmingly bullish out there. I get so many long signals that I have to do whenever I get more than 2 or 3 long signals a day. I do a gun to my head trade. And today, one of those gun to my head trades was on MRAM. This was a new long position here. Hammer candle on above average volume, strong green bop after an extremely excellent earnings report, which came with huge volume. Got long above the high of the day, calculating my size and risking to this low. Listen, I wish I could go all in on these, but you know what? I need these to at least consolidate for 5 days minimum, or else I have to treat everything like a 0.5R trade. I can't increase it to 1 or 2R where I would like to be right now in some of these unless they give me longer bases. And they're just not. It's just constant trend joins. But MRAM after today, I do want to lock in 10% at the market at the open on Monday. But it's just an example of just how strong this market is. And I mean, and these are just today trades that I'm not taking that interested me. FIVN with that hammer candle after its earnings. SIL C is giving me a hammer candle. OSS trend join hammer candle. EVC hammer candle after its strong earnings. Team hammer candle after its strong earnings. Piton even relative strength line at the bottom is your signal that it's okay to buy this laggard. So you can always buy a leading stock in a laggard industry group, but I need to at least see a strong relative strength line, and I see it here on Piton. BTGO on the IPO side, APC, Arco Petroleum, ESP. I don't even know what this company does, but it's a hammer candle, and I bet you it's a semiconductor. TX after earnings. There's just so many guys. RKLB. So, too late now. It's too extended. This is a beautiful cup with handle. When you saw it gapping up in the morning using this downtrend line, and everybody at Big Way Trading knows that this is my favorite space stock. I mean, there is no other. This is my favorite space stock, the number one. Um, I don't I'm not around in the morning because of the time zone difference. But when you saw it gapping up a little, you could have taken it above that downtrend line in that cup with handle that was drawn before today's session, by the way. And then a breakout above the handle high. That's actionable with that strong earnings report. It was a strong earnings report, nothing episodic pivot about it. But that volume surge today with that high day close, any pullback entry, any inside hammer candle, I'm all about this one. But this is just another beautiful, trader. And then we'll just continue with the hammers. KFRC, hammer, a lot, hammer, SITM, inside hammer, which will then take us to our trade ideas for next week. So I'm going to give you guys two. The one caveat behind both of these is they are not in leading sectors. So MRAM is in a leading sector. It's a leading stock in a leading sector with with a great earnings report on huge volume. That's putting all of the variables into an equation, or it's getting all the ingredients together to make a great cake. One of those ingredients is I would like to see a strong sector along with a strong stock. But you don't always get that. And right now, a lot of those stocks are extremely extended. So I'm going to give you my best ideas that I'm taking on Monday, and we'll see if they trigger or not. If they don't trigger, they don't trigger. If they trigger and hit a stop loss, so be it. That's trading. You're going to have a lot of losing trades. I have a ton of losing trades. So the first idea is AAON. It gapped up on earnings. And IntelliChart version 7, my highest volume ever is basically in the past 6 years. So it made my highest volume ever scan. I don't know if it's the highest volume ever. I'm so busy right now, but this market being so absurdly busy that I don't remember if I even checked. But either way, I have an inside hammer candle today on above average volume, and I believe BOP increase along with relative strength line continuing to make new highs. It's well above its 21 EMA, so everything's lined up here. So what I want to do is I want to get long above the high of the day, 140.83, probably have about a 1% max limit offset right now because there's just so many trade ideas that if it gaps up and runs for me, I'd rather have that happen than get a terrible fill, have it then reverse and fail immediately for a bigger than what I'm expecting to lose. So I'm going to risk 0.5R on the trade at 140.83 limit offset. Who knows? It'll be like around 142, and I'll be calculating my size 0.5R of my account capital and risking to the 125.23 on this gap up. AAON is one of these what I call a quadruple 20 name, where the current earnings and sales growth is over 20% and the earnings beat and the sales beat of the estimates was over 20%. Well, this stock is a 30, 30, 30, 30 stock. So it had at least 30% on earnings growth, sales growth, earnings beat, sales beat in the most recent quarter. That's a major earnings catalyst event. So we'll give this one a try. The issue with it, though, number 55 industry group out of 145. And I'll say it, I don't like the way the IBD industry groups have changed from 197 to 145. I don't like it, but who cares what I like and don't like. BLLN is the next long signal. This one also has a weak industry group. It's number 137 out of 145. So if AAON gives me this chart, this signal, this setup with those numbers, and its industry group is number 1 to number 10, much different kind of trade. Same with BLLN. So keep that in mind. My expectations modulate according to all of the variables that we have ingredients to make this cake. Right now, we're missing an ingredient, strong relative strength group. So is the cake going to be delicious? Delicious? It'll probably taste really good. I can't guarantee it's going to be delicious. The game plan would be LLN, which, by the way, huge earnings and sales growth. I understand the story. I understand the brokerage firms that brought this one to market. We'll see if it plays out. I'm going to attempt to get long at 94.47, a limit offset probably around 96, and I'll be calculating my 0.5R risk to this low. So I'm willing to risk 0.5R of my entire account capital to this low. You give me all of the variables in this equation being super great. For instance, look at this stock, Intel. This stock had a government catalyst and a delayed entry signal on this day. 325% gain. Now, what's INTW done since then? This is what I'm looking for. But to buy those 2x leverage products in these leading stocks, I need everything lined up, and I can't have a market that's this extended in the short term. But that relative strength line, I always tell members of Big Way Trading and even viewers of these videos, relative strength is everything. This chart just proves it.